Are we seeing the end of Asian interest in London? As each month passes, we continue to hear that Asian interest in London property is going to slow down. Or at the very least, there will be a serious challenger to the market. The reason for this argument is largely due to the effect of what we call north shoring, the shift in investing from the south to the north due to the lower costs and the higher growth, with many Chinese and Hong Kong investors seemingly making this shift. Chinese property inquiries in Manchester alone have risen by more than 250% in the first half of 2018, and this interest looks set to continue. Compounding this, research from Savills has highlighted that UK investors have overtaken buyers from Asia in investing London's West End property market over the first 2 quarters of the year. To many, this news would come as no surprise. However, it would be a mistake to generalize this information. Chris Harvey, Managing Director of Financial Services for Asia Pacific at Accenture, says, in truth, there is no straightforward answer. It really comes down to the type of Asian investor you are focusing on. We have worked with many different types, who in turn have different challenges, sources of capital and investment criteria that you need to bear in mind when assessing appetite. There has been a fall in the level of investment from mainland Chinese investors in the capital. And this, of course, is a knock-on effect from the government's capital controls on outbound investment. However, these controls have recently relaxed as of June, with Chinese investors able to redeploy the capital in the United Kingdom as long as the money is invested from UK property holdings or non-Chinese bank holdings. However, looking at the overall capital invested in London over the last quarter, we see that London is still an attractive destination for Asian investors. When viewing the bigger picture, the findings from Savills showed that for the first half of 2018, 3.4 billion invested from Asian investors, which represents upwards of 70% of the total investment volume of 4.9 billion. In addition, following the Brexit vote in June 2016, there has been a significant increase in buyers based in Hong Kong, which isn't captured by the capital controls. Hong Kong investors sought to take advantage of the weak pound for the comparatively attractive yields, with confidence of the long-term health of the UK economy. It is worth noting that we have seen some well-established investors becoming wary due to the UK's not so certain economic health. So although established that London is seeing more cautious investment from China and indeed Hong Kong, this potential gap is quickly being filled by other Asian investors. The steady stream of investment from Hong Kong has recently been exceeded by both Singaporean and Korean investors in the first half of this year. And the range of purchases is increasing, and if anything, Asian investors are looking for more stock to invest in within the capital. It would appear then that London as a whole is showing no signs of slowing down. As cities such as Manchester and Liverpool continue to attract increased investment, so too is the UK capital.